And who are short? The short positions are by the commercials, and the commercials are banks, and the banks are working on behalf of the United States government. And the same thing is true with silver, incidentally. And these large, concentrated short positions, short means you bet it's going to go down. These positions are way out of whack. The CFTC, Commodity Futures Trading Corporation, shouldn't allow this, but they do. And the only reason that they would is they're a government agency, and the government's telling them, no, this is the way it's going to be. And so you have this inordinate amount of short positions which have been set up to drive the price of gold and silver down. And in the silver market, there's two commercials that are holding it down. And in the gold market, it's three. And we all know who it is. J.P. Morgan Chase and Goldman Sachs are the ringleaders. And it's a situation where they, because of the physical demand, they can't hold it down anymore. And that's why you see gold breaking out, and that's why you see it go up almost every day. And it's going to gain velocity. And if we have some negative event, what's going to happen is that it's just going to bust out and go up $30 or $40 or $50 a day. And I've been telling my subscribers at the International Forecaster to expect that kind of volatility, because we saw that occur during 1979 and 1880.
I remember it so well. I'm watching from the sidelines, of course. Well, let's go to Bob, who's calling in from Kennewick, Washington. Hi, Bob. How are you doing?
Fine, thank you, Doctor. Trust that you gentlemen are also.
We're doing great.
Good. Praise the Lord. Could we broach the subject of devaluation tonight or maybe some other time in the future?
Well, you go ahead and bring up the subject. Go ahead.
And the ramifications of it, please.
Well, you go ahead,
Well,
Bob.
first of all, unfortunately for the dollar, devaluation has been going on for 10 years. And we're looking at a USDX index, and that is 6 major currencies versus the dollar. And it had a high of 124, went down to 71.18, went back up to 89.5 at the beginning of May, where it topped again. It's trading around 76. I believe it'll be soon, and I thought it would happen before the end of October, and I might be a little off on this. It may be by the end of the year. When it gets down there, it'll probably take it 6 months to a year, maybe a year and a half, to drop down to where it's eventually going, which should be somewhere between 40 and 55. There's no telling. It's a guesstimate. And at that time, I think a number of things are going to happen. There'll be a confluence of events. First of all, I think that at that time, the U.S. dollar will no longer be the world reserve currency. I think a trading currency or a trading unit will be affected. Now, recently, they talked about having the special drawing rights from the IMF used as this trading currency. And special drawing rights don't have any backing. There's nothing behind them. There's nothing behind any other fiat currency, with the exception of the euro that used to have 15% gold backing and now has about 7%. Now, what I think they're going to do is not use the SDR and use a currency unit based upon 20 currencies. And those 20 currencies will be weighted against one another, and they will all have a gold component of 10 to 15%. One of the problems that they're faced with is that not everybody in the group has gold or has enough, which means they'd have to go into the market and be a buyer to make that unit effective. But I think that that would work and be acceptable in world trade, and the euro would be one of those countries. And on the other hand, at the same time, as this international trading unit is created, there would be another meeting like in the early 70s at the Smithsonian meetings, and also in 1985, the Plaza Accord, where they had meetings to essentially devalue the dollar. And so at this meeting, all currencies would be revalued and devalued against one another. And also I see a debt settlement, a default. And all countries in debt to one another would have their debt reduced by 2/3. It would be written off. The other third would have to be paid. But at the same time, I see the United States officially devaluing the dollar, and it would be 3 old dollars for 1 new dollar. And that is the evolutionary process I see. I think that prior to that happening, we're going to get some pretty high inflation, anywhere between 15 and 30%. It could be higher. And I know some eminent economists who I generally agree with are talking about a Weimar or a Argentinian situation. And this part of this is which I foresee in the devaluation and default. The default would mirror what happened in Argentina in 2000, 2001. Weimar was a different situation, although it was in the thousands of percent of inflation. Everything went crazy. And I don't think we're going to get that. But we may, but I don't think so.
Well, hope and pray.
That's the way I see this thing going out. And I don't know anybody else that's come up with this sort of conclusion.
Okay, does that answer your question, Bob from Kennewick?
Thank you very, very much, gentlemen. I appreciate that very much.
Well, I think we're in for some very, very serious problems. I think the whole world financial system is crumbling, the end of an era. The America we've known before is never going to come back again with great wealth and prosperity. But this is all part of a scam to cover up what was really going on. That was the transfer of wealth to other nations, and they've done a good job on their effort to impoverish the American people. They know what they're doing. They just don't want the public to know. Bob, do you want to hang up and come back? We've got a lot of static there.
Oh, yeah. Sure, I'll be happy to.
Yeah.
All right, fine. So anyway, we'll go ahead here, and we've got Bill calling from, and we'll have Bob back on the line here in just a moment. But let's go to Bill, who's calling in from Memphis. And how are you doing, Bill?
I'm good. Bob apparently was on a radio talk show with a ex-Marine named Drew Rains. Are you familiar with that?
I'm really not, but go right ahead.
Okay. At any rate, this was about...
Go ahead, Bob. Bill, do we lose you?
No, I'm here.
Okay, right ahead.
What was his question?
No, he was just talking about you being on another station with a Marine. Go ahead, Bill.
Is that correct?
Yeah, that's Drew Rains.
Okay, and I just wondered if there'd been any further developments on this. You know, I read an article I have in my hand that they said they try to put this out as a hoax, even though many Navy wives had talked to this man that has this radio show, and you were on his show also. And I was just curious what other developments have come.
Well, what happened was that we were contacted by Navy wives, and they told us that one woman in particular told us that her husband, who was an officer, was on a ship, and as soon as it left the harbor in San Diego, it was quarantined, and they were given shots. Now, they didn't say exactly what they were. The assumption is that they were swine flu shots, and whether they were H1 or H5 remains to be seen.